Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Injective protocol. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand corner of the screen. Now let's jump straight into the TA. Taking a look at the daily chart, so you can see that we have a Fibonacci retracement set up with the targets to the upside. We have our November swing high and our December swing low. So we broke above the swing high, which is the first fib level here, obviously. We broke above that in January. We had a nice back test of support, actually two back tests here. And then we had the move to the upside. We broke above the 1.618 and we even retraced all the way up to the 2.272 at $9.60. So truthfully, you could have been taking profits at the 1.618, the second fib level, the 2.272. So that's why you either sell and you're okay with the price going higher, or you simply wait for the bull market and you don't attempt to swing trade. You simply stake and stay patient. That is exactly what I'm doing with Injective. So my average buying price is around about $1.36 here. So I was up 7x and now I'm up slightly more than 4x, which is fine. And I'm not greedy in that regard. I know where Injective can go in the long term, and I just want to accumulate as many tokens as possible. So we did have a short-term falling wedge playing out here on the 4-hourly chart. We had a bit of a pump from there, actually from that low, from that low we did a 32% to the upside. Obviously we did not retrace all the way up to our technical target, which would have been this April local high, but we printed a lower high and now we're coming back down. So the fact that we're printing another lower high is really negative. So this tells me that we could be pulling back down and rolling over to retest some of the previous resistance levels, to retest them now as support. And those could be these local highs that you see in March, in February, and at the start of February. So these 3 points can be very crucial in terms of holding us as support. And you have the 1.414 there, you have the 1.272 there. So I would say when we do end up coming back down here to $4.40 down to $3.90, that is when I would look to start accumulating some Injective, because this is still very expensive for me, especially with my average buying price down here at $1.36. So I would consider buying in this area, to be honest with you, because from where we are right now, that's another 40% pullback, and from the local high we've already dropped down 38%, and we potentially could be looking at a 60 to 50% correction. So usually when we have a 50 to 60% correction from the local high, it's a good area to start dollar cost averaging. But considering the fact that we did a 8x here from January all the way up until April, then I would expect a bit of a pullback here, to be honest with you, a bit of a deeper pullback, especially with the possibility of Bitcoin going back to $21,000, $22,000. Let's see if we can hold $25,500 first, and then we'll start targeting some of those lower levels. But as always, the lower it goes, the better it is for me, the better it is for all the people that want to buy at these cheaper prices, because at the end of the day, we know where the projects are going to be in the next few years. So these are going to be some of your important support levels. Now, for whatever reason, if you end up dropping below this, which in fact could happen, for example, if we see a flash crash, we could have a massive wick to the downside and we could retest, for example, $3. Now, I would honestly love to buy some Injective at $3, and I would start setting up some buy limit orders just in case we see some sort of a flash crash, because you never know when that could happen. So if you have some spare money that you don't necessarily want to be throwing in the markets right now, you could set up some buy limit orders in advance in this area, just to have that in your back pocket in case we do see a flash crash or a black swan event. Now, taking a look at the daily RSI, you can see that we're still kind of adhering to this ascending support trend line, because we did see a bit of a fake out here, but nonetheless we saw a bounce from the white trend line, and now we're pulling back down. So I would assume that, you know, when you get squeezed up between the support and the resistance here, at some point you're going to be forced into a move, and I don't think we're going to be breaking to the upside, seeing as how the markets are moving right now, especially with the possibility of another 25 basis points hike coming in June next month after the FOMC meeting on June 14th. So with all things considered, I don't think we're going to be having this massive break to the upside, although a short-term rally is possible before the eventual pullback, because keep in mind, they're not going to let everyone make money. We're not going to go into the bull market from these prices here. We're definitely going to see some sort of shakeout, because they do want people to start losing their money, start losing their minds, start selling at a loss, so that they can shake out all the weak hands, and then with an empty wagon head into the bull market at the end of this year. So that is hopefully what is going to be happening, because like I said, I like buying these cheap prices. So do you, I assume, if you're watching this channel. So let's hope we do get to buy that pullback. So as always, be ready for both outcomes, have some money on the sidelines. Now let's switch over to the weekly chart. And before we continue with the video, I quickly want to mention my Patreon that's linked down below in the description. If you enjoy my content, you want to get more exclusive content, and you want to support me at the same time, definitely feel free to check out the Patreon, because you're going to get a 7-day free access on my Patreon and an instant access to all of my content since October 2021, which is when I started. You'll get access to content like exclusive weekly podcasts, and we're starting to invite guests already. We have 40 plus low cap gem posts. We have a bunch of project reviews. We have a bunch of resources that are going to help you save time and make more money with this upcoming bull market. So this is definitely a great exchange of value for the both of us. And once again, there's a 7-day free trial. Feel free to check it out. You can leave anytime, and let's continue with the video. Taking a look at INJ on the weekly chart, now you can see that we do have a lot of volume coming in here, a lot of volume in April, in May. So this is the type of volume that we saw back during the bull market. Even right now, it's even a lot more volume coming in. So we see bigger candles, and this is good. This shows demand even in a bear market. And I do think we could be looking at higher prices, of course, during the bull market. So our technical target as of right now is going to be $111. Obviously, we can do a bit less than that. We can do a bit more than that. No one knows for sure. But based off of what we're seeing here on the fib, with the swing high printed in May 2021 and the swing low printed in July 2022, we have a 1.618 technical target at $111, and that is your target after you break this high over here. So you have to be breaking this high in order for you to start targeting $111. So you break the first fib level, which is $19.85. From there, you can start moving up, and you can start taking out some of the extension levels here, the 1.272 and the 1.414. So that's $42 and $63. So those can be your take profit points as well. But I do want to say as well that we have done something very bullish here. Is we have actually broken above a major descending resistance trend line. So we've back tested it multiple times in 2021, and over here in 2023 we finally broke above. Now what I would be looking for is a massive pullback, a back test of support, so a back test of this descending resistance trend line. So now we would be back testing it as support. So the resistance is flipped to support after you break it, and with that back test, that's going to be a perfect entry for anyone looking to buy Injective. Now yes, that is going to be around about between $4 to $3.50, because we do have the 0.382 there, and we do have the previous resistance there. So I would say we could wick a bit lower than that, but generally speaking, $4 to $3.50, that would be a healthy pullback, a healthy back test of a previous resistance, and from there we can obviously start moving to the upside, and we can start targeting those higher prices getting closer to the end of the year. Now if this was our bottom, let's say the 0.382 was our bottom, and we have the Fibonacci retracement coming from that low to the swing high in April. We're looking at $16.88 sometime potentially in September/August, once we're going to be seeing the bull trap. So the overextended move to the upside during summer is usually in August, and that could extend into September. Sometimes it does. So that is something that I'm looking forward to. We're probably going to swing trade some altcoins when that happens. So keep in mind, when you swing trade, you always have to be careful, because when you sell, the price can still continue pumping and you're going to be sitting there with your cash. So if you're not experienced enough, don't swing trade, guys. I can't stress this out enough, but obviously I'm not a financial advisor, and that should cover it. Let's also take a quick look here at the weekly RSI. So this is something that I would also consider a major support area. So this green support block between the RSI of 62 down to 51.5, that's where I would be looking to enter as well. So once we see a move all the way back down here to the bottom of the green support block, that's where I would be looking to enter, because that would be a back test of that previous resistance. So hopefully we do manage to hold that. If not, if we break below, then we could be heading all the way down to retest this low that we printed back in December. But generally speaking, breaking below would be good, because that would mean we're going to have a lot of selling pressure and the price is going to start dumping. So that's exactly what we're looking for. So thank you all for watching this video. If I missed out anything important on the charts, let me know as always, and I'm going to see you in the next video. Take care and goodbye.